for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
What we'll keep an eye out on is going to be the Trump and Xi's overall truce that comes in there. Everyone played their part as at the DY Patil Stadium on Sunday night.
The one sector which really stood out over the 5 trading sessions was the PSU bank space.
Nifty Bank will have to find its form. It's seen a decent pullback from the recent high.
So 25,720 is where the Nifty is starting. It's absolutely flat.
The activities in the ground is quite good, and therefore I feel the business is good.
In spite of all this asset quality that we have announced this quarter, we kept the slippage ratio guidance and the credit cost at the same.
It's a 100-point recovery that is underway. Nifty is at that 25,750 mark as we speak.
Two companies, Tata Motors and Ashok Leyland, have been the outperformers.
Q1 was the first quarter that we are PAT positive. As you know, Q2 is very well done and over. We would love to continue the trend going forward.
The Nifty up 32 points, mid-caps outperforming, and banking names in focus as well.
Well, that is the day so far. It's a good-looking screen with about a 60-odd point gain on the Nifty. Market breadth is comfortably in the positive. 1,800, 1,900 stocks are higher, and you got about 1,200 stocks which are lower this Monday afternoon. Last hour coming up. This is Closing Bell. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Surabhi. And I have to say, guys, I was walking around in that jersey, the blue jersey.
Then you realized.
I saw you guys. And I said, well, everyone's changed out. So that was the story.
That was the pump and high of the game. Now kind of back to usual, back to normal. Yeah. Though the high will continue for months and years together. But speaking of highs and lows, I think no stock takes it away more than Vodafone Idea. And it's not just Vodafone Idea. You're seeing that reaction play out on Indus Towers as well. So in case when you missed the gist of the flashes on your screen in the last couple of minutes, what's essentially happened is that it seems the court has clarified that the scope of that relief that was being discussed for Vodafone Idea goes beyond the additional AGR demand, which was just about 9,500 crores. The court has clarified that it will be covering the total AGR demand as well, which went up to more than 80,000 crore rupees. We'll get Ashmit to explain to us what exactly has happened and whether this is the final clarification, which means the government can also then go about and take a holistic view on the entire AGR matter and not just that smaller quantum of 9,500 crores with respect to Vodafone Idea. That's definitely the top story. But otherwise, Nigel, market's not bad, right? We started off fairly quiet in the morning, but things kind of picked up along the way.
Well, Surabhi, if you remember the morning call that we were discussing, we mentioned 2 points, right? FI shorts in the system, not so bad. The second factor we mentioned is the PCR coming to around 0.65. That's normally a recipe that you see that, in fact, the markets do bounce. And the good news today was that the GIFT Nifty was suggesting a downtick. And we did have a downtick of 40-50 points or thereabouts. So it's a perfect scenario to see a bit of a bounce. Can we get past closer to around the 26,000 odd mark? Now we'll have to see whether or not that can happen. But otherwise, the call was relatively easier from a bullish perspective today because of the ingredients that were in place. Soft start, and both the two technical indicators had moved out a little bit to the extreme. So in the near term, that bounce was expected. That's played out. Can we build on from here? Important to see.
Mm-hmm. Well, you've got Indus jumping, Voda jumping, Bharti perhaps also comes up on your screen. It's a, for the lack of a better word, a mysterious sector, telecom, but just crazy amount of volatility with this one. Order clarification, and it looks like, now the road's clear for the government to be able to offer the relief that it wants to, because at the end of the day, it owns half. It has got about 50,000 crores of market cap to defend. Its market cap now, which it owns in Vodafone Idea, that is. More in a bit. Well, let's just quickly run you through what's coming up. So markets, of course, doing well. Banking is leading the gains. And, the PSU Bank Index was up 5% Friday to Friday, that is last week. And it's no different today in that sense. Mid-caps, of course, doing well. Idea is the top story. Ashmit joins us in just a bit. We'll get you some, expert perspective on this as well, whether this is now all done, at least in terms of what is allowed. We'll also talk about Vedanta, which is up a big one, 4%, 20 rupee gains, strong second quarter management commentary, etc. also looking pretty good. We had the management with us. We'll play out some sound bites as well. BOB is the other sort of earnings reaction. And again, we had the management. Shriram Finance is another one, which is up, is actually the number one volume-led gainer across on the NSE. And we'll play out some sound bites there as well. So that's what's lined up here over the next 60 minutes. 60 points is what you have on the Nifty, 25,783. How should you position yourself in the last hour? We have Mitesh Thakkar joining us. Mitesh, good afternoon. Good to have you here. Your thoughts, quick ones on the indices and then any trades.
Good afternoon, Prashant. So two things. One, I think, we kind of bounced back from areas near 25,600. And two, I think, as was highlighted, I think the PCL was oversold. So, there was always this chance that 25,600 will hold, and the medium-term charts also very positive. Now, what we need to do to continue on the upside is to get past 25,800. I think once that is captured, then I think, the path toward 2600, 26,100 opens, and then, we can look at all-time highs. So that's the way we are approaching the markets. But till we break 25,600, I think to maintain clearly a positive bias. On the stock side, I have a buy on Astral with a stop at about 1468 for targets of 1590, and a sell call on Colgate-Palmolive or Colpal if it breaks 2185, sell with a stop of 20 points and look for a target of 2140.
Okay, all right. And those are individual trades. Well, as promised, let's go across to the big story, which is Vodafone Idea. Ashmit is joining us now. Ashmit, we were speaking on the phone 15 minutes back and, just talking about where this would go, and it's taken the last 15 minutes, all changed completely. What's happened, Ashmit?
Well, attribute to, as far as that 15-minute call is concerned, 15 minutes back that we were on the call, the reason I excused myself is because I saw Mukul Rohatgi and Solicitor General move towards court number 1, and that's where all the action went down over the last few minutes. The action that has gone down, what has effectively happened is that the Supreme Court has given a clarification which paves the way for the DOT to consider relief for Vodafone Idea across all the AGR dues. Now, why is this in question? Well, the Supreme Court order, the last order that had come out, had left room for confusion. The last Supreme Court order had said that Vodafone Idea itself is only asking for relief against only and only additional AGR dues. Whereas Vodafone Idea wanted to correct the Apex Court that that's not the only relief they've sought. They've also sought relief for reassessment of all the AGR dues. Now, both these aspects is something that the Apex Court dwelt on, applied its mind on, and has now corrected its earlier order, and therefore, in doing so, has paved the way, has untied the hands of the DOT to grant relief on both these counts, the additional AGR dues as well as all the all the overall AGR dues. This is important, given as how the Solicitor General was also present in Court 1. Even he too said that perhaps the ideal view that the Apex Court should take is that whatever application flows, whatever application is filed by Vodafone Idea for relief should be considered on its own merits. So effectively, this order, number one, clearing that confusion, and number two, opening the hands of the DOT to grant an overall relief with respect to the AGR issue that is plaguing Vodafone Idea. Of course, the government stance has been is that the facts and circumstances on the ground have changed. We now have skin in the game. We now have 49% stake as far as this troubled telecom company is concerned, and that's the ground on which they've asked for relief. The Supreme Court obliging, and the DOT is likely to now fall through and consider any application that comes from Vodafone Idea.
Ashmit, I, for one, quite love courtroom dramas. But I think this is something, when it comes to telecom in this country and Vodafone in particular, I think real life could really overtake real life. Beat all the series hands down. Right from the retrospective case, going back a whole decade back, right up till now. And then now, finally, it seems, on the AGR matter at least, the decks have been cleared for the government to take a final new clear call. All right, Ashmit, thank you very much for the details over there. There you see, stock reactions once again on the upside. Deepan Mehta is with us. We'll discuss Vodafone and a lot more with him as we go along. But first, this. Deepan, again, I mean, this has been just, I don't know, it's been maybe a smart trader's delight, an average trader's nightmare. But now it appears there's clarity. At least the ball is very clearly back in the government's court. So is there any reason to look at it beyond just day-to-day trading?
Yeah, that's right. I think, one should look at it, Vodafone, in much more positive light. And I think now all we can expect is more announcements from the government as to how finally they are shaping up this entire issue with Vodafone. And subsequent to that, whether any fresh investments are coming into Vodafone. So I think many positive triggers for Vodafone at this point of time. And let's see how it plays out. But I think from investors' perspective, even Bharti Airtel could be a beneficiary because eventually whatever relaxation relief is granted to Vodafone should be offered to Bharti Airtel. Only that Bharti Airtel has already paid some of its AGR dues. So I don't know how that actually works out, whether they get a refund or not. But anyway, I think it's great news for Vodafone. And I think some maybe positive follow-up for Bharti Airtel shareholders as well.
But I'm not sure. I mean, we don't have Ashmati. I think he's gone. But from what I remember, when he was explaining the verdict, when it came out to us, the actual copy of the verdict last week, I think it was clear that this is with respect to only Vodafone Idea, doesn't apply to the sector as a whole per se, because this is a bit of a special situation with the government now being a very large shareholder. But we'll see how this plays out and what the final interpretation really looks like. Deepan, the other stock of the day has to be Shriram Finance. I mean, the numbers look great. No complaints there. The management's very confident of 16-17% growth, quite confident on the margins as well. But then there is the story of a potential deal that refuses to die down. Your thoughts? The stock has already run up 20% in the last one month, I think more than 20%. So is the best in the price? Would you buy fresh? How are you looking at it?
Certainly, I think first of all, Shriram Finance's track record in terms of collection has not been the best. And from time to time, whenever the sector comes under stress, their NPAs do tend to shoot up. And that has caused problems in the past. But there's a lot of interest in banks, NBFCs, investment from foreign investors' point of view. And maybe there could be a deal in Shriram Finance. But nonetheless, I think these are kind of great times for NBFCs with lower interest rates, relaxation on RBI, from RBI for risk weightages. And overall industry is doing very well, I think, with commercial vehicles, passenger vehicles, the entire auto industry doing well. Provides a big impetus for Shriram Finance. And also it's trading at a big discount. Some of its peer group companies as well, be it Chola or Bajaj Finance, although its track record is not as good as these two companies. As shareholders of Shriram Finance, I think best to remain invested. One quarter should lead to another quarter, and you could see the company going, the stock price going from strength to strength. But as I said, I think end of the day, the minute the sector turns a bit muddy, this is one company's NPAs tend to start shooting up.
Okay. Well, before we move on, let's actually hear out some of the management commentary. Like I said, they've been sounding very, very optimistic about demand. They are seeing demand across the board, CVs as well as the other auto categories, and quite confident on the margin front as well. Take a look.
Values of the vehicles have remained very strong. It has not changed at all. That there is nowhere you will see idling of a vehicle, income getting reduced, or vehicle value coming down. So these three things are very important for viability in a CV business. And since we are in touch with the customer, we have direct access to customer, we did not see any stress as of now. Even the sales numbers, if you look at the first half in the sales numbers have gone up. The CV demand has gone up, even though most of the demand would have come in the fag end of September. But even in October, the year-on-year sales numbers have gone up. That means there is a significant demand for a commercial vehicle. The activities in the ground is quite good. Typically, the festive period or festive time is the indicator of the mood of the customers. And this time around, the October has been all-time high sales number for all the segments, whether it's a passenger vehicle, commercial vehicle, two-wheeler, and three-wheeler, tractor. Every segment has shown big growth. Only one sector that has not shown a big growth or maybe even a growth is the construction equipment, where there has been some slowdown in the infrastructure spending.
All right, Deepan, I want to come across to you and ask you your view on Vedanta. And let's run our viewers through first a quick analysis on Vedanta and why the stock is up. First, with regard to the results, the aluminium EBITDA number, I've been tracking it from, they were doing less than 2,500 rupees EBITDA for a quarter. Now that number, the last few quarters, it's moved from around 4,500 crores to the last quarter, they've done 5,500 crores. Very, very encouraging. And, they're guiding for better times ahead as well. Now, what they're saying is that in this year, the EBITDA number will look more like $6 billion approximately. CLSA, they had put out an estimate, they were working with around $5.7 billion odd. Now, in the first half of the year, they've done only around $2.5 billion, which means the second half of the year, they'll do around $3.5 billion. That'll be very, very encouraging. So you're bracing for a better setup in the second half of this fiscal. Brokerages, CLSA, they are bullish on the stock. They have an outperform rating. Target price roughly around 580 rupees. But they point out that the outcome of the $2 billion bid for Jaiprakash Associates assets, that's going to be very, very important. That's key to watch, given it's going to be a diversified asset. So we'll have to keep an eye out on that. Citi as well, they have a buy rating, target price around 585 rupees. They say that the parent leverage, well, that's at comfortable levels. The potential medium-term aluminium price upside as well is there. So that's why they do like the company. So both those two brokerages fairly optimistic on prospects. The management, well, they spoke to us earlier today. They gave us a good breakdown. On the aluminium business, they said that they're expecting the aluminium prices to hover in that range of around $2,850 per ton to around $3,000 per ton, which is encouraging. And they're saying the cost of production will fall from here because the second alumina refinery, that's up and running. So that's what will help cost to further come down by close to around $100 per ton odd. On the debt reduction front, they're saying Vedanta Resources is in great shape. Remember, a few quarters ago, it was at around $9 billion. It's come down to around $4.5 billion. And they're saying in the time to come, it'll go down to around $3 billion. While on the listed entity, Vedanta Limited, the net debt is currently around 1.4 times odd. They're expected it to come down to around 1 times. On the demerger, they're confident. Demerger gets done in this fiscal year itself, and they're ready to give the corporate guarantee to the Ministry of Petroleum. If that is the case, that demerger could see the light of day. To put all this together, a better showing the second half of the year, optimism with regard to the demerger and valuations in favor explains why the stock is doing quite well. In fact, earlier today, I spoke to Mr. Ajay Goel, the group CFO at Vedanta, on a whole host of issues. Let's listen in to what he had to say.
So you may have seen in the last NCLT hearing, the SEBI has approved Vedanta's demerger. And the next date of hearing, in fact, is on the 12th of November. And that hearing we see as conclusive. Vedanta is agreeable to keep the corporate guarantee in case if that's a requirement. But we are very, very confident that a demerger will reach conclusion by end of fiscal, as we have earlier committed.
Deepan, what do you say about this one? Vedanta, not a stock for the faint-hearted. Over the last 10 years, we have discussed it numerous times. You don't know what they'll do next. But now if the metal cycle is going to be, you're going to have a lot of tailwinds. And the company seems to be doing the right moves, particularly on the cost side. The LME is not in their favor, but on the cost side, they've reduced costs drastically. And you have that demerger, which gives you the optionality value as well. Your view, 515 rupees odd?
Najil, I think you summed up the investment case really well.
Not the investment case, putting the facts on the table.
Yeah, but I think the facts are very attractive. I should correct myself. Yes, it's not an investment case. The facts are pretty attractive. And I think you covered it really well. Maybe, you should look at the stock in positive light. I think there's a trading rally possible because typically when these splits take place, the kind of listed entities, the separate companies, their value tends to be more than the combined entity. So that at least in that sense, there's a little of margin of safety and massive expansion plans also going on stream. And gradually, I think uncertainty around the corporate debt is reducing. So I think you could have a good trading rally in Vedanta for the next few quarters or so. Certainly worth watching. As an investor, I think best to remain invested. Fresh investments maybe at these levels or slightly lower may give good returns.
The high which this one made, I think it's I'm looking at a yearly chart on this one. And
on Vedanta?
Yeah, 526, right? 526,
yeah,
527 was the high.
It's closer to the, it's at a 52-week high.
Basically, 500 around is essentially the point where it got to almost in 2010 as well. And then since then has been sort of meandering. So this is the place now. if this is to sort of take out.
And as I always mentioned with regard to Vedanta, there is, if you look at it in the last 5 years as well, the stock could be all about, but I think there's 250 rupees of dividend as well. So, effectively it's around 750 rupees. So sometimes when you get these things that, the promoter's tricky, promoter's saying, I'm taking care of Vedanta resources, I'm giving you also the dividend. So some shareholders are pretty okay with that. I recall, Philip Capital Vikas, who joins us quite often, when the stock was around 210 in September 2023, he came out and said, I'm happy with this. And he's got the call right. So kudos on that one.
Yeah, absolutely. Wockhardt is up some 9%, 10%. I'm not sure what's happening. In terms of timelines with their blockbuster molecule, which is, which has got a very, very large addressable market, they were waiting for some approval, and it was supposed to happen. I mean, the timeline is right about now. I'm not sure if that approval has come through. We've not heard anything. Deepan, do you have any view on Wockhardt per se?
No, I think that, it's great that they have got, among the few companies which are really solid when it comes to new chemical entities, and very good success is what they've got over there. Another company which comes to mind, of course, is Glenmark. But Wockhardt also, I think, if they get the approvals and actually sales start to trickle in, the profit margin will be quite high, astonishing for this particular molecule. And there's always a scope to expand it to smaller other markets where the regulatory or the permission requirements are slightly lower in India as well. So generally positive on Wockhardt, but these things one can't really get a handle on what the numbers will be and what the potential of the new molecules are. And mind you, they've got 3 or 4, exciting molecules in various stages of development. So, but one, I think, I don't recollect the name exactly, has got the highest potential, as you say.
Got it.
All right. Thank you, Deepan, for that. A good conversation. You have a good rest of the day, and we look forward to catching up again soon. Right now, we do have to take a break. But before we do that, it is time to highlight the Super Pro chart of the day, powered by Money Control. Super Pro, a segment where we turn data into direction. Each day, we pick one chart that sums up the story driving the markets and help you understand the why behind the what. Here's today's chart and what it means for your next market move. IDFC First Bank is the stock on your screen, showing a rectangle pattern and a bullish breakout. Let's get the chart up. Yeah, there you go. So it's a rectangle pattern, which is a consolidation phase, and then a breakout above that. As you can see, a rectangle pattern bullish breakout is a signal that the consolidation phase is complete and the momentum is expected to drive a continuation of the preceding uptrend. And if you'd like to access more expert-driven insights and actionable chart patterns like this one, simply scan the QR code on your screen and subscribe to Money Control Super Pro. Plus, this festive season, there's more reason to celebrate. 10 lucky subscribers every day can win 1 gram of gold. So don't wait. Scan, subscribe, and make your portfolio shine brighter with Super Pro. Welcome back. It's a day that really belongs to buzzing individual stocks. Lots of mid caps and small caps flying around. Wockhardt, of course, the numbers and the stock is on your screen, 10% higher. There are more names. In a bit, we'll talk about Thangamal Jewelry. Thangamal, after numbers, is up 20% on circuit. Talk about glittering and shining. And another example would be, say, an LG Balakrishna, also reacting to numbers and commentary. LG Bala is up some 15-16% as well. So really, quite a day for individual stocks.
Just one more, if you look at Stovecraft, when TTK Prestige came out with a set of numbers, the stock started moving up. And valuation, it has that comfort. Now, it ran too much ahead of itself that 12-13% growth that they delivered is not good enough. And that's where the stock has come off. So you see the last few days, the last 1 month, I think it was up 15%. It's given up half of those gains because the numbers were not as good as anticipated. So that's why, in fact, the stock is down today 7%. 1 month, it's still up 8% after falling 7%.
Okay.
So, Street tried to extrapolate something which didn't happen.
So both ways, sharp reactions coming in on the way up and some on the way down. But talking more about the up, Let's look at Dredging Corporation. Dredging Corporation also last time I checked was, quoting a double-digit gain. Yeah, still 20% circuit. Now, Dredging has won a bunch of, I think, orders. The total value could go as high as 17,000 crore rupees. Let's go across to Vivek to understand more. Vivek, are these orders? Are they MOUs? I mean, what exactly is driving this?
Well, they are MOUs that, the street is expecting and hoping that they get converted into orders soon. But, let's have a look at the news itself. A couple of important developments that Dredging Corporation has given the exchanges. First one, last week, we actually had the India Maritime Summit. So Dredging Corp, of course, a key participant over there. And the company over there entered into 22 memorandum of understandings with 16 different organizations. And the total value that the company says of all of these MOUs put together was over 17,645 crore. Now, this particular MOUs are important given the fact that the company operates under a consortium of 4 major ports, which was under key focus area as far as the Maritime Week itself was concerned. So Visakhapatnam, Paradeep, JNPT as well as Deen Dayal were the 4 ports, and remember all of these ports function under the aegis of the Ministry of Ports, Shipping as well as Waterways. Now, more important as far as dredging is concerned is that there has been a earmarking of 4,000 crore rupees of capex. Now, this is dedicated to the modernization of the company's fleet as well as the company's equipment, and they expect this will help strengthen their own as well as India's dredging infrastructure. So this is an important development, especially the capex that will go ahead and augment their existing capacity.
Vivek, is this related to this shipbuilding push as well, or that is, or not really? Or have you picked up? Yeah.
Well, it is because a lot of the dredging. The company also in the press release has mentioned that they will be working closely with players like Cochin. They'll be working closely with players like Mazgaon Dock. So it'll be important to note, and it'll be important to see exactly the contours of any specific deal or any specific tie-up that the company does. What will be the scope of work for dredging, and what will be the total value that dredging itself gets? So while it's a positive development, no doubt, it's important to know that there could be some moderation as far as the expectations are concerned, especially the scope of work for dredging is concerned.
The Maritime Week ended last, I think it's a few days old, but I think the releases, the exchange information has just come, right? I mean, from dredging yesterday or whenever, a couple of days back.
That's right, yes.
Yeah, Friday was a big day. Today, again, 20%. It's a small, little over 2,000 crores in market cap. So it's a small PSU with some big numbers now. So we'll see where this one is headed. As we were talking about dredging, there was a flash on Grow as well. Grow, of course, is, I think, by sheer number of users, the largest broker in the country. There, of course, the issue is for the IPO is going to open. The anchor book details were flashing. I don't know if you can pull that up for a quick bit. So against IPO anchor allocation of close to 3,000 crores, under 3,000 crores, the demand is for 50,000 crores. So the IPO madness, whatever you want to call it, in that sense continues. Although I must also add at the same time that when you look at anchor book allotment and interest, etc., do we have the graphics? If we can pull it up for a quick bit. Okay, I think what we'll do is we'll have the flashes. We'll discuss this with Jitendra Sriram, who's with us, Senior Fund Manager, Baroda BNP Paribas Mutual Fund. Jitendra, good to have you with us here. Thanks very much for joining us. So we'll talk about Grow when we have some of those numbers come up on the screen. But just the market, Jitendra, how are you feeling about things?
Overall, I think it is looking far more positive at this point ever since this festive season has begun. Because if we look at even the earnings picture that has unfolded so far, and I think almost about more than 50% of the Nifty names have reported, I think after many quarters, we are actually starting to see the recovery of earnings growth come in. So if I look at the large cap universe, which is ideally the Nifty 100, I think for the companies that are reported, we are seeing something like about a 13% kind of earnings growth that is coming. So it's double digits after probably 3 or 4 quarters now. And mid cap is almost about the 25% mark. So I think we are at least seeing some recovery in earnings that are starting to come in, which is very heartening.
I think that Grow bit, the anchor book names, etc., we will put up. But 3,000 crores is the issue size and 50,000 crores is the demand. But institutional investors don't have to put in any money. I mean, it's not as if they have to put in 50,000 crores. I mean, it's basically, to transfer the money in the escrow. You can just expression of interest in that sense. And in that sense, I mean, a fund with the AUM of 500 crores, I mean, if it wants, it can express an interest of 2,000 crores. So it's got nothing to do with the size of the AUM or any fund managers. So in that sense, when you look at some of these numbers, don't get carried away. Of course, there is great demand and it shows interest, but you're not actually putting the money into an escrow waiting for allotment to take place. So just wanted to make that point. Some of the names, of course, who've participated or rather have put in bids are up on your screens as well, all source-based information. Jitendra, one more capital market name. Any thoughts out here on this space, and maybe if you have a view on Grow as well?
Not specifically on Grow, but I would say, the fact that market is getting very comfortable with these platforms kind of businesses, because they give you a lot of non-linearity, and you have seen multiple names, the quick commerce names, or whether it be online insurers, online brokers. I think the fact is that you're seeing very, very, if the model becomes successful, and I think the risk is there. The risk is that maybe not everything survives. Some of these will turn up as survivors, but if you are with the survivors, you probably make disproportionate returns in those platform kind of names. And it's true for payment systems and various other examples that you have there. I think that is what is probably exciting a lot of people towards this space, which is it. I mean, if you were to just step out from that, broking is a fairly old business, but I think the point is that the non-linearity that comes with the platforms.
Hi, Jitendra, good to have you in. Speaking about platforms, a lot of these new age businesses that are in the market or are listing, I mean, there's a fair amount of debate going on valuations as always, right? By the way, just a while back, I think Zepto put out some sort of a release saying that they are no longer going to charge a platform fee. I'm not too sure about the details or the veracity of it right now, but if that's true, it could be very disruptive, right, for the other players as well. So when it comes to quick commerce and food delivery, I mean, what are your thoughts given the valuations?
No, I think all these businesses there will obviously, it's not going to be a linear journey upwards. In a sense, there is going to be some point of time where multiple newer entrants try to establish their foothold. There will be certain pricing pressures which come in, and again, there will be some consolidation and move back up. But these are typically structured. Sometimes these battles are not even at the marketplace. They might be in your mobile phone. For example, for any app, for example, a payment system, you may not keep more than 2 apps. Or for example, a cab hailing app, you may not keep more than 2 apps. So the point is sometimes the battle is in your mobile phone rather than in the marketplace. So if you are able to succeed and establish your share of mind share with the customers, you become the winner in that. So it's largely like a winner-take-all model. So to an extent, it might be that the first player has about a 55-60% market share, the second person with 30%, and all the others are clustered in that 10-15% market share. So it can very well turn out to be those kind of businesses.
That's nicely put, right? The battle is in the mobile phone, and that's really where the stakes are the highest. Battle in the mind, and then therefore the mobile phone. That's how I guess these internet businesses are built. Nigel?
Well, that's right. Hi, Jitendra. Good to see you in. I recall we had a chat a month or so ago, and you were telling us that you like some of these consumer-facing themes, discretionary themes as well. Some of them have done quite well, and clearly the street believes that discretionary spend is only going to go up from here on, and some of the discretionary consumption stocks are poised for better times. Any fresh take you have either on this sector or something new that you've started liking? The auto sales, for example, did come out, and they look pretty good.
Yeah, I think auto has been quite decent, and especially the fact that, GST has obviously been a catalyst for not only enhancing sentiment, but we are also seeing, whatever reports we get from the trade, we are seeing a lot more of showroom interest and so on and so forth. Model launches are also starting to perk up and all that. So I think auto is definitely one area that is starting to look up. I would also probably put that, consumer discretionary could also play out in a lot of other things like, whether it is hotels or jewelry and stuff like that. All these are also, we heard some very fabulous, numbers for Dhanteras and all moving around in the social media. So time will tell whether how much of it was correct or not. But I think those are at least early indicators that all these measures that the government took, right from income tax cuts and then following up with the GST cut and so on, at least it's starting to rub off on the consumer sentiment as such.
Okay, all right. Jitendra, a final word before we let you go. You're sounding pretty optimistic on the prospects of market, and we discussed the last time around as well. Hopefully, earnings do come back. What's the biggest risk to the market? Because government action has come about. We have seen that the RBI as well, they have fired quite a few of their bullets. The global environment itself is holding out. According to you, what's the big risk to the Indian equity markets?
I think I would probably put inflation as the biggest risk because of what is happening with Trump tariffs, etc. I think there is definitely two things which are happening, which are probably a little bit of an upside risk on inflation. It may not be an India-specific factor. One is obviously the fact that you are seeing the tariffs lead to higher levels of inflation. The second is also that with Fed cutting rates, there is a weaker dollar environment which one is into, and which is leading to a surge in commodity prices also, and you can see it in all your metals index and various other indices that commodity prices are spurting, which can have with a lag effect some push up on the inflation front. So we'll have to keep an eye on that. I think that could be the big risk for markets.
Okay. All right, we'll leave it on that note for today. Thank you very much for joining in. Good to get that perspective from you on the market. Quick check back on the screen, and it seems to be pretty much the same situation, the same picture. Headline index, Nifty sensex, not too much going on, fairly quiet, but lots and lots of action at the individual stock level, and that's reflecting in the way the mid-cap market is shaping up. Mid-cap index is still up 0.75%, though, and the advance decline ratio, of course, is also still positive. Let's get the advance declines up. More than 1,600 stocks advancing still, and about 1,200 stocks on the declining side. So broader markets are doing pretty okay. Well, on that note, let's move on and get to Nimesh for today's D Street Chatter. Nimesh, a new week. What are you picking up?
I said we're a small recovery from an extremely oversold levels. I spoke about the PCR being at 0.65. Normally from those levels you see a pullback, and that's a small pullback is playing out in today's market. Even from a flow perspective, I understand there's going to be a small buy figure. So watch out for the institutional data. But while the mid-cap index is outperforming today, the sense is that at least there seems to be sell flows from larger institutions. So, but the index is up, there could be a supply as well in the broader market. That's the overall flow perspective. PSU Bank continued to outperform. The index is up another 2%. And in general, the PSU is a space where that's well bid as well from larger institutions, which means there is buying interest from larger FIs as well as domestic funds into the PSU stocks in the last couple of days. On the upside, watch out for 60 to 200. That's a big resistance level to watch out for on the upside. But looks like there could be some small momentum back in the broader markets, and looks like some bit of FI buying is also back in the large cap stocks.
Okay, all right, Nimesh. What about individual stocks? You picking up anything?
Well, so the first stock on my list is Karnataka Bank. There was a large block in today's market. Nearly 1.5 crore shares got changed hands. I understand one of the large FPI holder was a seller in today's block. They're still left with a small stake, but in terms of buyers, I understand 60% of the book was bid by long-only funds. So the disclosures could be quite interesting in Karnataka Bank today. The second name is Eternal. If you look at the intraday charts, even that stock is recovered from the intraday lows. In fact, last whole week, the stock was under pressure on back of selling pressure. Looks like that large selling from a leading FI seems to be largely over, and hence you're seeing a bit of an uptake in Eternal today. And the last is Vishal Megamart. While the numbers are yet to be out, but I understand post-earnings, you're going to see a large block in Vishal Megawatt. So that's something to watch out for. In fact, in general, now that we are heading towards the fag end of the earnings season, the QIP launches, the blocks are going to start very soon in a lot of the mid-cap names.
All right. Thanks very much, Nimesh, for that. That's D Street Chatter with indication that the blocks are going to start raining down along with the primary market issuances, etc. as well. Lots of supply lined up. We'll take a quick commercial break here. We're going to get you some buy today, sell tomorrow, basically short-term trading ideas with our technical experts on the other side. Stay tuned.
Welcome back. The markets continue to chug along. More about individual stocks today, but let's find out what's happening in the F&O arena. This put-call ratio that Nigel was pointing out that, every time it goes to that 0.6 level, it signals some sort of an uptrend. Nigel, what's the latest?
And it worked again, right? So it'd be, with regard to those F&O Qs. So it went to around 0.62 earlier in the trading session, and now it's back at around 0.8 or thereabouts. So the PCR was indicating that we could very well see a bit of a bounce. That's the way it's played out. The other factor that we pointed out earlier today as well was the Nifty Bank. That was making lower lows. It's broken the trend. After 3 sessions, it's broken the trend because today's low is higher than Friday's low. So you like that at least, and you'll count on the Nifty Bank to do the heavy lifting like it's done in today's trading session. Why did the PCR move up? That's because the put writing is back in play. So whether you look at the 25,700 put, the 25,600 put as well, there's a good amount of writing out there, and the premium out there, has come down, which is telling you that the bulls believe that, they can defend the lower levels. So the crucial support zone is at around this 25,500. The 20 DMA is there, and also you have the options data that's suggesting that that band could hold out. But you'll get a fresh breakout first when we get past the 26,000 odd mark, and then obviously the 26,300. That's the line in the sand. That's the level that the bears believe they are going to defend. So, that's basically the levels that you're looking at. Stocks that we're looking at in today's trading session. Godrej Consumer, there were some shorts in the system. The numbers look quite good. They've done that inorganic growth as well of around 450 crores. Street likes it. Short covering bounce playing out on that particular name. Bank of Baroda as well. Some of these PSU banks, they're moving with good amount of momentum, and that's the case even on this one. So big short covering bounce is what we're seeing on this one. And finally, on Patanjali Foods, well, the numbers were not as good as what the street was anticipating. In fact, we are seeing some shorts gradually creeping into the system. Higher than normal, volumes is what we're seeing even in the F&O market on Patanjali Foods. So some shots in the system. So the good news today is we have bounced on the lows of the day. However, follow through is something that the bulls will track. For now, 25,500. That's the important mark to defend on the downside. Back to you guys.
All right, Nigel. So we'll watch these levels as we get into the last, 16 minutes of trade. So Midesh is with us with what he'd want you to do in terms of short-term trading ideas. Midesh, what would you recommend?
BTST on Indus Tower and PI Industries. So I'll take PI Industries first. Keep a stock below levels of 36.65. Look for targets of 37.10.20. And Indus Tower, I think, along with Idea, what happens. But the chart setup is quite positive. So we'll take a BTST here with a stop at 379.9 for targets of 387.
Okay. All right, Midesh, got it. Thank you very much for that. We will see you again with all the trading action tomorrow. For now, have a good rest of the day. Let's continue to put the spotlight on buzzing stocks. And one stock that's sparkling today is Thangamayil Jewelry. This happened right after numbers, and it's hit upper circuit, and it has stayed on upper circuit. Mangalam's here with more details. Mangalam, what is it? Is it their inventory being, marked to market, or something else? Or 20% circuit on the stock?
Well, it's a mix of both, So overall, gold prices on the year have risen about 52%. They also sold a fair amount of silver this time around. Silver prices have been higher as well. And add to that, as compared to the other listed peers, they had a slightly lower share of gold, which was hedged. So that has increased, and that has overall added to their performance as well. So if you just look at their performance, 45% growth in their revenue, 1,705 crores. This compares with 1,178 crores. The same time last year, they reported an EBITDA loss, but that was on account of the inventory loss that the company had taken because of the customs duty cut that was announced in the previous year's budget. So on a favorable base, the EBITDA actually looks fairly strong, a 99 crore EBITDA gain versus a 10 crore loss, which implies a margin of just 5.8%. The net profit as a result of that, 58 crores versus a loss of 17.5 crores as well. Gold jewelry sales up 44%. What was a big positive for me was gold volumes actually increased by 2% as well. At a time when gold prices are up over 50%, one would imagine that revenue would largely be led by value and not so much volume. But there as well, there's no negative volume, and that's a positive. Non-gold sales have been growing by 52%. And in that, silver volumes have actually risen by 23%. That's a positive. And gold hedging over last year was 90%, now is 95%. So from the highs, gold prices have fallen. So that should also do well for them because they've hedged at slightly higher prices. In the first half, they've opened 9 stores, total at 66 right now. Same store sales growth on an expanded store base is still double digits. That's a positive. And 3 more stores likely in the next few months in the city of Chennai itself. So far, they've actually been an outside Chennai in Tamil Nadu sort of player. But in the last 1 year or so, they've entered the market of Chennai, and that has done fairly well for them. That's reflected in their numbers, and the stock has the moves to show.
Mangalam, as you run us through the Titan expectations as well, which will report today, I mean, the question, one common thread, maybe if you can string along, there was some expectation that as, precious metal prices have gone through the roof, it'll basically impact volumes and demand, right? And some of the companies we've spoken to said sales value is strong, but volumes are... So I remember Malabar, or maybe it was the other one, volume was down 20, value was up 20. It was that stark. Do we have that volume figure as well?
Yeah, so we have, for Thangamayil, the volumes have grown by 2%, even as value has grown by 44%. So it's not a negative. There is this divergence between volume and value as it would have been expected, but the good part is that there is no decline in volume as well. It's a marginal positive, obviously not as much as 20% or 30% as the value has grown, but it's still in the positive terrain. And the good part is that from the highs, we've seen a decline in gold prices. So every time that happens, following a sharp rise in gold prices, the buyer, rush to lock in at lower prices is a lot higher. So my sense is that the third quarter volumes, despite the prices being a lot higher year on year, would be a lot more positive given the decline that we've seen from the highs.
Okay, all right, Mangalam. Thanks a lot for giving us that quick update. Let's get Mangalam, but we can't let you go at that, right? Tell us about Titan.
I'll tell you about Titan, Nigel.
Later this evening, you're going to be busy.
Yes, and tracking Titan numbers, Nigel. That's all that will keep me busy. I'll tell you what, we have a cheat sheet for Titan already, where the domestic jewelry business reported a 19% growth. Surging gold prices have driven substantial ticket price increases, but there was a marginal decline in buyer counts for Titan. The second quarter had a high base due to the customs duty cut, but that has been offset by early onset of festive season. So all in all, 14% revenue growth is what the street is expecting. EBITDA jumps 47% again on a favorable base, similar to that of what we saw in the case of Thangamayil. Margins from very low numbers of 8.6% jump all the way to 11%, and the net profit on the back of that from 700 crores goes all the way up to 1,051 crores, a 49% jump. We already know that studded jewelry grew in mid-teens, and the growth in gold was led by gold coins and gold bars as against just plain gold jewelry. So all these are margin accretive for the company. What it does and what it has to say in terms of performance in the festive season would be something that we'll be tracking very closely.
Okay, all right, Mangalam, thanks a lot for that, and trust you're going to be busy with Titan in the evening.
Yeah, not the store, but the numbers.
Yeah, Sonal said, please reach home on time. The baby's waiting for you as well. Mangalam, thanks a lot. Well, let's get in Sudeep Bandyopadhyay. Hi, Sudeep. Good afternoon. Good to see you. And what are you making of some of these jewelry companies? Titan's holding pretty strong at these valuations. Thangamayil, as Mangalam said, they've been opportunistic as well. Stock locked 20% up. What do you like?
Well, I definitely like Titan. I don't too much want to venture into these smaller jewelry companies, which are typically regional players, and they have a limited, coverage in a particular geography. So it's always better to go for some of these national players. So Titan has been our favorite for a very long time. And look at the performance, in spite of the gold prices shooting where it did shoot. I think their business update was very, very encouraging. Let's look at the numbers. But whatever update we have heard from the management was pretty encouraging. And of course, when they come up with the numbers, we would like to know how the festive season sales have been. And I'm sure they will give some idea about that. Also, some of the the businesses which are smaller businesses have started performing, and that's very, very encouraging for Titan Consolidated. But end of the day, it's a jewelry company, and that studded jewelry share increasing obviously is margin accretive, and I think things are going good for Titan. So in spite of being such a huge, such a large revenue company, 19% growth is quite commendable. I would also I've been looking at Kalyan, and I think they also have performed reasonably well. And if somebody has to buy a second player, I would say go and buy Kalyan. So the choice is obviously Titan, and if you want to go for the second one, go for Kalyan.
Titan and Kalyan are the two ideas from Sudeep. We'll take a quick commercial break here. We're going to come back. More questions Sudeep's way, and there's about 9 minutes to go for the market close.
Welcome back as we're in the final lap of today's trading session. Vodafone Idea and Indus, by the way, they're still holding on to the bulk of their gains, between 5 and 8% higher. And then, of course, there are other names. RateGain is having a good session today, 6% up on RateGain. There's also Godrej Consumer, which has reacted quite well to the numbers. Still in conversation with Sudeep Bandopadhyay. Sudeep, so within the FMCG basket, did you find any one number inspiring enough to take some exposure? Anything in the staples plate?
Well, I think Godrej I did like. The numbers were decent, and the acquisition which they have done, Mustache, I think that's also pretty interesting, because that's one segment where presence and growth is definitely warranted. Their international business also is by and large looking good. For quite many quarters, they haven't been performing, and market has been punishing them also. So valuation-wise, also, I would say they are, I won't say reasonably priced, but they're better priced than many other peers. So, Godrej Consumer is one company which can be looked at post this number. Of course, the Q3, Q4 will be keenly watched. Apart from this, I think I did like HUL also. There were a lot of challenges which HUL went through, but the strategy which they have now taken with the new management in place looks interesting. Of course, the proof of the pudding is in eating, and we'll like to see third and fourth quarter.
Okay, all right. Sudeep, there's some news coming in with regard to multiplexes. And my colleague Ashmit says that there's an interim win for multiplexes against the price cap in Karnataka. So that will be some kind of interim relief, at least for PVR. They're saying that, the Supreme Court has stayed Karnataka government's rules that sought to introduce a price cap. So for the time being, that price cap will be pushed back a little bit, and they'll have to come with some other resolution. So PVR could be the stock that you'll be focusing on because of the interim relief that we're seeing. I think the stock has just perked up a little bit from there. What's your view? There was this fear of price cap, occupancy as well as down. But what do you think? People still go to the movies?
Well, absolutely. People still go to the movies, and you go on a weekend. Though the fact remains that there may not be any great movies, I think you find the multiplexes kind of full. The F&B is doing great business. And of course, as we all know, that's very, very margin accretive. So overall, I think they are at a good place. A lot of releases are lined up in Q3 and Q4. So an interesting space to watch. Valuation is not cheap, but definitely worth getting into PVR INOX.
Okay. All right. Sudeep, thank you very much for all the advice today. We just have about a minute to go before the bell goes off. So let's quickly recap what has been actually a pretty steady day. Steady with the positive bias because a lot of individual stocks, wherever earnings were hitting the mark, those stocks were rewarded in a big, big fashion. For the large cap screen, about a 45-point gain. Let's talk about the winners then. And Shriram Finance definitely takes the top honor. 6% up on Shriram Finance, taking its monthly win to 30%. That's the kind of run the stock has had. The other name that perked up after earnings was Tata Consumer, 2.5% up over here. A bunch of auto stocks had a good session today. Tata Motors and Mahindra, both of them going home with gains of about 2% apiece. Then you had a couple of financials like HDFC Life, SBI Life, HDFC Bank, Kotak Mahindra Bank. So even State Bank of India, by the way. So fair amount of green across the financial landscape. What didn't work? Maruti Suzuki. It seems that the management saying that steady state, 7 to 10% sort of growth across the portfolio, that triggered some profit taking on the stock. So down about 3.5%. ITC, L&T, TCS, these were the other three big stocks, which were down about 1.5%. But a much better flare in the broader market, Nigel.
Well, that's right. Vodafone Idea, the relief came in, stock up 10%. Sterling Wilson, another stock that's seen a big fall from the top, that was up close to around 8%. BLS E-Services, that's the other stock that was up close to around 14%. And EPAC Prefab, that stock was up close to around 10%. So big moves in some of these names. Vedanta, we told you that, in fact, those numbers look pretty okay. The management commentary was superb. Brokerages are quite optimistic with regard to the prospects. I think the joker in the pack is going to be that demerger as well as JL. For the time being, the stock went up close to around 4% in trade. Refining margins have been improving. BPCL's numbers are quite good. That stock, in fact, went up a good deal in today's trading session. Urban Company, not on the winners list today, so that did see some selling. And IDBI Bank, after seeing a good run in the last few trading sessions, that as well came in for some profit taking. But net, you'll have to say that today was a pretty good trading session, and in fact, the bulls we'll be quite satisfied to see a bit of a recovery from the lows. Not out of the woods, but at least a bit of a pop.
Absolutely, and I think, decent day to start the week. 50-odd points, 25,775. It's a wrap on this edition of Closing Bell from all of us here. It's goodbye. Thanks very much for staying with us. Markets Forward comes up in just a bit.